Hey everybody, Jeremy here, coming at you Sunday, October 22nd for the market bias update report for the week ahead. Obviously, bears came back in incredible fashion this last week. There has been a ton of volatility, and we ended up having a significant pullback back down to the 200 period moving average. This is currently hanging out around 42.50, and currently prices are sitting at a very important support level. This was one of the three different scenarios that we had talked about after the big rally about 2 weeks ago. We had said, we either wanted a high base here with a breakout above the 50 period moving average. We wanted a flag based pattern, which we got here, and then looking for a breakout of the previous pivot high. Or if both of those failed and more volatility and selling did come back into the market, we were looking at this support level down here, the previous pivot low, coming in right around this 200 period moving average as a fairly significant support level to give us potentially a double bottom here and give us a little bit of a reversal. Hopefully have some buyers step back in. If we put this out to a weekly chart, you can see that also kind of correlates here with the rising 50 period on the weekly. That's going to be just shy, or excuse me, just a little bit above 4,200. Looks like about 4210 or so. And that really goes back all the way back, basically all the way back through until like July of not this year, but the previous year, July of 2022. That has played out over and over and over again as a very significant originally resistance level and now potentially holding as support. So we really need to see that 4,200 level hold. Hopefully we will get buyers stepping in here to push prices off of this 200 period moving average. Currently, prices are actually just barely underneath that 200 period moving average, which is not a good look to start the week. Hopefully, we will get some development there and see prices push back through this little shelf that we have had form up. See if I can get it zoomed in here properly. There we go. This little price shelf that we have had form up basically ever since the futures market open here. Hoping to see that hold, hoping to see that entice traders to come back in and hopefully drive prices back up into these moving averages, looking for a double bottom here. As of now, you don't want to be the first person to dive in. You always want to see confirmation. So if prices do get back above this 200 period moving average, around 42.61, and you get some kind of an intraday pattern showing some stability there on the futures market, there might actually be an opportunity for some kind of a day trade or very short-term trade looking to pop prices back up to 4,300 or a little above. If we do not get back above that 42.60, 42.61 level, and instead take out the previous pivot low here, which is around 42.35, that is not a great look. By that point, we would be looking at 4,200, and if that broke, honestly, the next stop down would probably be around that 4,000 mark. On the weekly chart would be a significant price drop there, another couple hundred points potentially if that 50 period weekly does give out. So those are kind of the two scenarios we are looking for, either that daily bounce reclaiming the 200 and coming back up. Watch for the intraday again on that to see if we can get some kind of an intraday breakout. Otherwise, if it takes out this pivot low and then compromises the 4,200 level, down to 4,000 would kind of be the next major support, with a little bit of support around 4,062. Going out to the NASDAQ, let's check in on the NASDAQ here as well. NASDAQ has been holding up, and this shouldn't surprise anybody, right? Because in the marketplace, you always have money coming out of certain sectors and flowing into certain sectors. And big tech has been the area of the market that has been holding up and really giving the S&P 500 a better look than maybe it deserves currently, because you have Apple and Microsoft and Google and Amazon that equate basically for 25% weighted of the S&P 500, and those charts have been holding up okay, but they are starting to get compromised. Actually, semiconductors right now is one of the best areas for potential shorts that I have seen on my scans. You can see right here, NVIDIA breaking down, moving averages rolling over. Avgo, same thing, breaking down, threatening to break down here below the 20 on the weekly chart, looking to potentially short down to 800, past that, maybe even 750 or below. AMAT, Applied Materials, same thing, big kind of head and shoulders pattern here, threatening to break down on the neckline, probably coming down to 125. Current price is about 134, so potential good breakdown trade there. Lam Research, another semiconductors, again, inverted head and shoulders pattern here, looking to break down on the neckline. So anyways, the NASDAQ is looking suspect going into this week. We really, really need to see these support levels that some of these major companies are barely holding on to. We need to see them hold, because otherwise the S&P and the NASDAQ are going to have a lot more volatility and a lot more movement to the downside if those charts break. It's not going to take much to just have those few companies. If those few companies break down this coming week, a lot more volatility could come into the market. So keep an eye on those, set up some shorting opportunities if you know how to short or play options via puts, and protect and hedge part of your portfolio, looking for that breakdown if it does occur. Again, you never want to be the first person jumping in, so you're going to want to wait until the level actually gives out. On the NASDAQ here, that correlates to 14,586, the previous pivot lows over here that had previously given us a little double bottom with the rally about 2 weeks ago. Now we are threatening to break that down, hoping to hold. If we put this out on a weekly chart, you can see actually the moving averages have already rolled over. They have confirmed lower here. And our moving average ATR indicator is actually showing bearishness as well for the first time in a while. So on the NASDAQ, if this breaks, basically looking for prices to drop down to around 14,000. If we go out to the Russell, Russell's clinging on here. It has just gotten the snot kicked out of it the last, couple of months, basically going back through until mid-July. Since mid-July, it has basically been straight selling. It doesn't look like it is going to get much reprieve here, maybe a couple days bounce, because it does look a little oversold to start the week here. But honestly, it is very, very likely that we're going to be seeing this come back down to around the 1640 level. So probably another 50 or so points to go to the downside here before our next big support level. And if that support gives, that will be a nasty look. So hopefully we will get some support coming in here around 1640. Don't be a hero. The Russell is not a place to be looking for trades right now unless you're potentially shorting. But like I said, it's kind of in the middle of no man's land and would need to either rally back up and give a new short opportunity, or just let it continue on down. Once things are overextended like this, there's not really a great opportunity for that. And finally, if we do see some buying come back into the market, really we would have to get back above this diagonal resistance line, which probably would correlate to this decreasing 50-period moving average by the time prices came back up. So looking for bullishness, probably not playing anything to the upside until we got a pivot high breaking back above 1800. But for that to happen, the bulls have some serious work to do. Right now, pressure is definitely to the downside, and you got to favor the bears. Looking out, excuse me, at the Dow Jones, nothing really to see. Very similar look to the S&P. It does have quite a distance here below its 200-period moving average, whereas the S&P is right at the 200-period moving average. So that's the one difference. But in terms of the actual chart pattern itself, We are overextended very similarly, coming into a similar range of support from the other side, looking for buyers to step in and try to give this a double bottom here, but doesn't look particularly likely right now. Going out to TNX, this is the 10-year treasury yield, and this has been a chart along with UUP, the US dollar, that has been just putting a ton of relentless pressure on the market. This combined with the war and stuff that has broken out in Israel, the two of those things are just causing a lot of chaos in the market, a lot of uncertainty in the market. So we need to see some resolution to this chart, hopefully a pullback and breakdown in TNX and also in UUP. And UUP actually has a little bit more of an opportunity here to cooperate with us. If this chart does end up breaking down back down below 29 and let's say 75, if we can get back down below that level and close below that, that would confirm a topping pattern on the US dollar, and hopefully it gives some reprieve to the stock market. So this is going to be a very, very important chart. Going out to Bitcoin real quick, has been an interesting move. Last week we said that we thought that there was about ready. We were about ready to see a pop in Bitcoin. We've got the pop back up to around 30,000. I kind of have a feeling that we are going to pull back a bit, back down probably around 29,000 is my guess, to kind of reset. We are up at the upper end of the price movement here with diagonal resistance directly overhead, some horizontal resistance, significant pivot points from back in July and August directly overhead. So it makes sense here that prices might stall out a little bit, might give us a pullback, and I would be looking to potentially play any pullback into that 29,000 level. So keep an eye on 29,000 for Bitcoin if you play in that realm. Looking at crude light, got a nice pop last week, consolidating, pulling back again. This chart is interesting to me for day trading potentially, but nothing really more. The price movements has been way too sporadic from day to day to really be able to catch a clean chart setup on this unless you are going day trading intraday. So nothing really to see here in terms of swing trades. Really need to see the volatility kind of settle out of this a bit, and that's probably not going to happen while we have war going on again with Israel. So expect more volatility in crude light, and also expect if this chart explodes to the upside based on the war intensifying, that will also put pressure on the US stock market as a whole, and might end up causing a more significant break of support on the major indexes. So keep an eye on this chart because it's going to be very, very important to that. It is actually trying to break down a little bit here right now, which would give actually some reprieve and some support to the stock market. So hopefully that will continue and we will see a little bit of reprieve here in high oil prices. And then finally, last one I'm going to really cover today, gold. We've just been on a monstrous tear on gold. It got overextended significantly to the downside, and we just had this massive V-shaped recovery. To anyone that has caught any of this movement, awesome, awesome job. I smashed a couple of trades along the way here, but now we feel a little bit overextended. We've already bought off the lows of today's pullback candle here, but I would love to see this chill out for a couple of days, pull back and settle into maybe the 1960, 1970 area, and hopefully give us a couple of days here to be able to trigger into a new trade. I really, really hate jumping into new trades when you've had such a big price movement without a significant reset. But I do see continued opportunity in gold. I do think overall in the next few months, we are going to see gold moving significantly higher. So right now, just waiting for some kind of secondary pattern to develop to give us an opportunity to get back into our gold trades. Finally, let's go out and look at our Forex Factory for news coming up this next week. Nothing on Mondays. We have a little bit of reprieve tomorrow. Tuesday, we have PMI manufacturing data. Wednesday, new home sales. Both of those will be important. Thursday, unemployment claims, durable goods. Pending home sales will be important Thursday as well. And then Friday, revised consumer sentiment and core PCE price index. Both of those will be important. So smattering of different important news items coming out this week, but I think it's going to be mostly a technical driven week. We are going to be looking at that fight on support for the S&P 500 and for the NASDAQ in particular, and really looking to see if those two support levels hold. And if they don't, it's going to be lookout below. So keep an eye on that. We also have a very, very busy earnings week coming up. Everything in the bright pink here has earnings in the next 2 weeks. So this week is going to be the 23rd to the 27th. So anything that has a date stamp on it between now and the 27th is going to be reporting earnings this week. Huge number of companies are going to be reporting this week, and a ton of very, very important companies like Google and Meta and Amazon, Microsoft, Apple, all of these companies are reporting in the next like 10 to 12 days. So keep an eye on earnings results on that. Those are going to probably make or break the tech sector support, whether or not it holds currently, and that will make or break the S&P and the market as a whole. So keep a very close eye on these earnings coming up in the next few days, because they have potential to really set the tone for the rest of the year, and whether or not we get some kind of a year-end rally or if we get a much deeper pullback going into the end of the year. So anyways, keep your eyes on that. Trade safe, guys. Look for significant bearish opportunities, especially in semiconductors, like we talked about already. And as always, let me know if you have any questions that I can help with. Talk to you soon. Bye.